Low inventory, frustrated buyers, rising interest rate. Think the luxury real estate market is dead? Think again. That's what we're talking about today in part 2 of the luxury trend series I'm doing. Stay tuned.
I'm Sherri Ann Green with Coldwell Banker. Welcome to my YouTube channel that guides home sellers and home buyers in Washington, D.C. and Northern Virginia.
Welcome back to my channel. If you are new here, I hope that you will subscribe and don't forget to hit the bell so you don't miss a video. This is a series on the luxury real estate market. I have an entire playlist that I will link in the video, so make sure you check that out as well. My brokerage, Coldwell Banker, along with WealthX, Census Wide, and the Institute for Luxury Home Marketing, has put together a luxury buyer trend report. It is the most up-to-date current information on what's happening with the luxury real estate buyer. If you follow my channel, I've done an entire playlist on the luxury market and what happened during the pandemic. This is the most current and up-to-date information on the trends that we are seeing right now in 2022 and expect to continue into 2023. This is a two-part video series. This is video 2. If you haven't seen video 1, make sure you check that out. I will link it in the video so you can jump right to that if you want to, but stay here and let's go through the next 3 trends that we are seeing in the luxury buyer market. As I mentioned in video 1, I discussed the first 3 trends, and those were the unconventional buyer's market, smaller footprints, and reconsidering relocations that happened during the pandemic. In this video, this is video 2 of the series, I want to go through the next 3 trends that we are seeing, and they include the search for stability, moving beyond borders, and creative financing. So let's start with the search for stability. A growing number of affluent buyers are gravitating toward real estate purchases that create financial, emotional, and even psychological stability for them. They see real estate as a proven long-term investment that they can generate income while building generational wealth. With the pandemic largely behind us, they are returning to these luxury epicenters that they used to really embrace. And some will even seek out areas that are less affected by climate change. How interesting is that? I think we've seen a lot of climate change recently and a lot of how that has affected real estate, and the luxury buyer is paying attention. This YOLO mindset, you only live once, of pandemic buying that caused purchases of big dream homes and properties or second homes, the mind shift has changed, and it is moving toward opportunities that give the long-term financial security and quality of life that the affluent buyer is looking for. In part of our research, we did a survey with luxury buyers, and over a third of the respondents believe real estate to be the safest long-term investment, ranking it higher than company shares and stocks, bonds, crypto, and pensions. And even though inventory is rising across the luxury market, the increases in inventory are not expected to be enough to bring prices down significantly anytime soon. Demand for a second and third home in multiple locations continues to drive the luxury market as affluent buyers take the long view perspective of real estate. And that's what's interesting, is that there isn't one property type that is leading the pack here. Investors are looking for all property types, from single family homes to fractional ownership. For those that buy and hold an investment property, the passive income and equity growth could offer the stability the affluent are looking for if a recession does materialize. Those investments could sustain a family for a generation if done correctly. Think about it this way: adding a multi-family rental property to their investment portfolio could end up being very profitable given the rise in rents that we have seen across the country. And when looking to return to traditional centers of luxury like San Francisco, New York, Chicago, they've seen a resurgence in demand. Global cities like Paris and London are also showing strength, even in the face of rising cost of living due to the war in Ukraine and ensuing energy crisis. These locations tend to hold their value over time and have maintained their reputation as safe havens for both foreign and domestic investors. Another emerging priority for many buyers, especially among young buyers, will be finding a property and a location that is less affected by climate change and extreme weather. In the future, it is expected that an increased number of buyers will seek out homes in locations that are less prone to natural disasters such as hurricanes, wildfires, and tornadoes. In 2020, a New York Times article proclaimed the great climate migration is already here. And another stated that climate migration will reshape America. Boy, that's going to be something really interesting to watch. Our fifth trend is moving beyond borders. Affluent Americans are seeking opportunities abroad like never before. Reasons Americans are looking abroad include the rise in the cost of living, surging home prices, and the political climate. And where are Americans looking to buy? Central America, Canada, and Mexico are among the top spots. Affluent buyers are also looking at emerging markets like Costa Rica, Panama, Chile, and others. International buyers have also come back to the U.S. in droves. It isn't only a lifestyle decision, but a long-term diversification play. The U.S. has traditionally been regarded as a safe haven for international buyers. Even with real estate prices as high as they are here, international buyers from high-cost cities view U.S. property as a relative deal. That's interesting, isn't it? Even though we see these high prices, international buyers see the U.S. market as a deal. They also see the long-term investment strategy that can be achieved here as well. Traditionally, Chinese buyers have spent the most on U.S. real estate. In 2022, buyers from China and Canada remain first and second in U.S. residential sales dollar volume. Buyers from Canada and Mexico make up the highest percentage of overall international buyers. And where are those buyers making a purchase? Florida and Texas have topped the list. And what are they buying? 44% are purchasing those homes to be used as vacation, rental property, and sometimes even both. Our last trend is creative financing. And this is something we're talking about in the non-luxury market, let's call it, as well. How do we make a purchase happen in the midst of what we see with changing interest rates? So the rising interest rates are affecting the luxury buyer, but not in the way that they may be affecting the non-luxury buyer. And by that, I mean a new generation of high net worth buyers are getting creative with their real estate financing this year because of the traditional interest rate changes. While not financing per se, cash transactions are expected to increase for the luxury buyer. One creative financing option like margin or stock portfolio loans and private bank loans will also gain mainstream appeal among the affluent population. Let's talk about leveraging those portfolios for just a second, because this is one of the creative ways that the affluent buyer can get into the market or get more into the market during a time when interest rates are rising. As a low risk to banks, ultra net worth investors have always had access to greater wealth tools and greater wealth building tools with lower interest rates. Asset bank lending, borrowing against your portfolio, for example, became increasingly popular during the pandemic when interest rates were low and the stock market was still gaining at a record high. In doing this, typically affluent buyers pledge stock and collateral to get what is considered a margin loan at a low interest rate and flexible payment terms. This allows them to tap the cash that they need without having to sell investments that are still seeing gains. These loans also allow them to avoid capital gains tax if they were to sell the investment. Even as interest rates have risen and the stock market cooled, these types of loans may still outweigh the disadvantages for some buyers. You can simply pay yourself back within the account, and there's no monthly payment that you have to worry about. The other advantage is you can access the money quickly, so you're seen as a cash buyer to the seller. And we all know that is important to the seller, having a buyer who's paying with cash. Other financing options have changed considerably over the last 2 years, with private banks and wealth management companies now offering more exclusive finance options such as zero deposit mortgage. multiple loans, and interest-only mortgages that can target the aspirations of the mass affluent. 5 years ago, non-bank lenders accounted for roughly half of total originations. 2 years ago, that figure was nearly 60%. Adjustable rate loans, also known as ARMs, you've probably heard about these in the news recently, have also seen an uptick in popularity recently as home buyers look to secure a lower interest rate. 1 out of every 5 mortgages is an adjustable rate mortgage. And on the luxury side, that percentage is even higher. Most clients with ARMs refinance well before their rate changes, or they wind up selling the property because of a need to move or change locations. Some affluent buyers are even negotiating seller carryback financing. And what this is the seller becomes the lender or the bank. The seller really wants to sell and they are an affluent seller and they have the means by which to finance the purchase of the buyer. Some are willing to do it. Some are also willing to buy down the points of the buyer's interest rate. They offer it as a credit to the buyer, and the buyer uses that credit on their settlement statement to buy down the interest rate with points. It's a really creative way that you can get a lower interest rate. It's an interesting way to get a credit from a seller. It's not related to the house or the home inspection, but it affords the buyer cash at closing to buy down their interest rate. Now, we're seeing this too in the non-affluent market. What's interesting is that the luxury buyer in many cases is also asking for that. And that is the unusual and creative part of this. The luxury buyer usually isn't asking the seller for a credit or seller financing, but in this market, they are. So let's look at the big picture here. As inventory rises across locations, property types, and even price points, the expectation is that more luxury property markets will eventually shift toward a balanced market or a traditional buyer's market. However, not all indicators point to a total downturn. If inventory remains tight, the seller's market trend that we have seen may simply continue in the luxury space if the buyer demand remains where it is. And while that demand is expected to soften some in the luxury market, it's important to put the slowing of sales and increased property in perspective as it relates to where we are this year. The year 2021 was a rare market occurrence, brought on by massive wealth gains and a life-changing pandemic. Instead, in 2022, market comparisons are better understood in the context of stable years in our real estate market. Sales in the first 8 months of 2022 are still 8.6% higher compared to the same time frame in 2019. Looking back even further, today's luxury single-family homes have seen a 60% appreciation since 2017. All this to say, we know that the home doesn't just provide financial stability. As we all discovered during the pandemic, a home can provide emotional and psychological security, a sense of well-being, and a better quality of life. And that's true in any market and at any price point. Interested in the luxury real estate market? You can download my entire trend report below. Check the link, download the copy, read the entire report cover to cover. These 2 videos are just a snapshot of all of the wealth of information that's contained in the trend report, and I think you'll find it interesting. And you want to learn more? Watch my entire luxury playlist right here.